Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Monday, January 3rd, 2011. Well, folks, here we go. New year, new time, new massive profits available. That's the way I look at this market as we get started in this new year. First things first. I hope everyone had a fantastic new year, and again, look forward to being with you here for this entire year, making massive amounts of money, as we just said. The bottom line is the markets are having a big rally today. Now, let me ask you this question. Should it surprise anyone out there that the markets are rallying today? Absolutely 100% not. Why? Well, think about it logically. What do we know about the new year? First of all, the first day back, volume is generally light. In addition, first couple days back, expect new money flow into the markets. So you have new money flow coming from IRAs. People can put more money there. You have more money flow based on the first of the quarter, the beginning of the quarter. All those factors plus light volume for the first day back of the new year, you have to figure that's going to give a positive bias to the market. In addition, you have POMO, permanent open market operations. The Federal Reserve is still pumping this market up, folks. They are still flooding the market with liquidity to create an asset bubble. All right, asset bubble. Why? To make the average person feel richer so they continue to spend money. That's been the goal by the Fed. We've talked about it now for months, if not years, that's what the Fed is going to try to do. People in the media are just starting to talk about it. Again, it's all about being on the cutting edge of the trade, and that's where you have to be. Having said that, you see commodity stocks ripping higher, financial stocks ripping higher, technology. It's a very, very broad-based rally. Apple Computer up 7, Amazon up almost 5, ExxonMobil, Chevron both up well over $1. Goldman Sachs up almost $5. JP Morgan up $1.50. It is a solid rally across the board. And again, think about logically why the reasons for a rally would be intact today, and that's the conclusion. I've told the Research Center subscribers this. I've said, guys, over the last 2 weeks, I've said, listen, just expect that neutral to upside bias. Be patient. Discipline is key. Wait to short this market until after the new year, meaning that once you get that initial surge to the upside of new money flowing into the market, then wait for things to get ridiculously priced, and then we'll be in the cutting edge of the short position, which is exactly where I plan on being, folks. So again, anticipatory is key. Discipline is key, holding back, not shorting before this initial pop in the markets. If you know that, then you can begin to start to scope out positions. I talked about this to the Research Center last week. I said, start making your list of trades that are high on the chart, and then wait until midweek, late week, then start to look for a possibility, look for the signals, price pattern, and time. If you can get those signals correct, then you're on the cutting edge and you will make money on that trade 85 to 90% of the time, assuming you're using in the money stocks methodology signals. All right, now, looking at the spiders right here, folks, you can see what we're talking about. The market's gapping up today. This is a key river theory. River theory is a key proprietary technique used by in the money stocks. When you gap above multiple resistance, look, the 200, the 50, the 20, all these resistance lines we gapped above today. Guess what that means? It's a river theory. That means the market will most likely continue in that direction for the foreseeable future of the day. That's exactly what's happened. You just floated sideways to up. Volume has gotten lighter and lighter, as we talked about. As the volume gets lighter, it gives more of a positive bias to the market, and most likely the markets will stay up in this general range today. I don't really expect a major sell. Could we pull back a little bit? Yeah, a little pullback intraday is not a big thing, but I don't think the Fed will allow this market to come down drastically. If we look at the 60-minute chart here, you can see we gapped above some key lines here. This is another signal of a river theory. When you gap above this, we'd been stuck in this range. Take a look right here. You've been stuck underneath this purple line. If I zoom out, take a look from this pivot high to these pivot highs. Every time you hit it, you sold off until today when they gapped it above. That's Federal Reserve 101. That's new money flowing into the markets 101. And again, you can see the results on a massive upside. By the way, last week was an amazing, absolutely stunning, amazing week in small cap land in the Research Center. For those of you that missed it, I am sorry you missed it. It is a sad sight. Why? Because there were so many small cap runners that we threw out there. Literally 100% gain on TIV. What a move there. XING I put out on the blog. That was a freebie I threw out there to everyone because it was just a day trade. It ends up running like 40% in one day. We gave out XIN on the Friday. I believe it was Friday as a play. That ended up going up and has continued to rally. Just the plays have been astronomical. The profits that I've made last week in the final couple of weeks of the year on small caps have been astounding. CPSL was another play in the Research Center. GSI was another play in the Research Center. All these stocks going parabolic. CHGS, they all happen to be in the steel mineral play, commodity play, and that's kind of the obvious reason behind it. But It's just been where it's at, folks. And again, there should be good plays. I even put a small cap out in the research center today. If you join now, you can obviously view it and get in on board, as it hasn't taken off too much yet. It is up a little bit, but not too much. And that is a good sign for now, as I do think it will have some good upside potential in the coming days and weeks. All right, now a couple other things to go over. Let's talk with the dollar. The dollar is slightly higher today, but it is off the highs. You can see a little bit of a dump. Dollar opens up here and then dumps. That helps the market stay up. And now we've just gone sideways again. A little bit of a bear flag here in the dollar. Maybe we see a little bit more selling into the close. The GLD is actually flat on the day, although coming back a little by little, which is interesting because you have the GLD flat, but a lot of commodity stocks taking off. Now, the things that I have to say about the commodity stocks are getting a little out of control in my opinion. I really do believe that, folks, that the commodity stocks are getting out of control. MCP, take a look at this. This is Molly Corp. This is up over 10% today. Look at the chart on the daily chart. It's gone basically from this point here in the beginning of December, which was at approximate price of 27 bucks, now to 57. That's over a 100% move in this. Now, it's not. I'm not saying that it's a good short yet, but there will be a point. There will definitely be a point that it's going to be a good shorting area, and I will be alerting you when via the research center I like it. Okay. In addition, other plays, Freeport-McMoRan also getting toppy. It's up again $2 today. This is starting to get in a range where I'm interested, but remember, it's key to remember the discipline. Right now, you have a lot of new money flow coming into the market these first few days of the year. All right, everyone, again, as I mentioned earlier, you have IRA money, you have institutional money being put to work. You have a lot of money that's flowing into these funds because the bullish sentiment in the market is so high right now. Where is the one place they're all going to want to go? The hottest of 2010, which is commodities. They're running into commodities. That's going to pump these stocks up astronomically. That's the key. Be patient. Wait for them to hit key levels. I will be analyzing key levels in tonight's nightly video of the Research Center and giving it to you absolutely. All right, we're going to be talking about what levels do I like a Freeport short, what levels do I like a Chevron short, what levels do I like an Exxon, Apple, Amazon, you name it. We're going to talk on these and be ready. And again, we're not talking long-term shorts here. You got to be an active swing trader. We hover on swing traders in the research center. All right, swing trading, what is that? Swing trading is shorter-term investing. It means you're investing for a few days to a week or a couple weeks, looking for a specific move, and then you're moving out or moving in the opposite direction of the market. I'll go short and long 100 times intra-year and make 10 times as much money as someone, or probably more than 10 times as much money as someone that would just be holding in one direction. And again, it's a trader's market, meaning a swing trader's market. You can be in a play and hold it for a little while, but you got to be ready to sell when you get good profits. Greed will ultimately kill you. You have to be smart about it, folks. Okay? All right. FCX we talked about here. Let's take a look at the USO. The USO is the oil ETF. It's actually up into a little bit of short-term resistance here at $39.30. I still like it for a move to about $40. It gets above 40, I think it's extended at that point and looking for a pullback past that level. Goldman Sachs and financials, and this is the little tidbit I'm going to leave you guys with right now. All right, you guys might say, well, what's the next small cap area to move? What's the next key play that you like? I'm going to tell you right now, the next play is going to be off these financials. These financials have ripped higher. Take a look at JP Morgan's chart. JP Morgan, just in the beginning of December, was trading at around 37 bucks. It's now 44. That's huge for a stock that size. That's astronomical in terms of a market cap appreciation. Now, where you're having these large cap financials going, what's the next level? Look for the small cap banks, folks. I'm telling you right now, the small cap banks will catch up. Maybe later this week into next week, they will start to run. Keep an eye on them. I will be giving out plays via the hot charts and alerts and the Pro Trader in terms of these small cap banks. But I'm telling you right now, spec money, which is now making good money in JP Morgan, eventually they will move out of it. Look for the next area. Regional small cap banks most likely will be that. So again, look for big gains there. I think there's a lot of shorts in those too, which could create massive squeezes, and that's where I'll be looking in the next week or so for great plays. So there are lots of plays out there. 2011 is upon us. It was an unbelievable 2010, especially the last couple of weeks were just crazy via the Research Center. It's going to be even better, I believe, in 2011. It's going to be a trader's year, which means you're going to be swing trading up, down, up, down, up, down on lots of different trades. You got to be ready. You got to be focused. You got to be disciplined. We're here to help you in all those facets. Guidance, education, and obviously the discipline of education and swing trades will be on the cutting edge, folks. And again, join us. You have a free trial now offered here at In the Money Stocks. We encourage you to take a shot at it and test us out. And we believe you will be unbelievably happy and make lots of money. Take care, enjoy, and I'll talk to you tonight in the nightly video in the Research Center. Take care.